Hello everyone. Let's learn a new lesson, income tax and car loan. First definition, let's see adjusted gross income. And we always say AGI to represent adjusted gross income. It equals the gross income minus adjustment. Gross income is the money your company promised to give it to you. For example, your company says every month they will give you 5K. And minus adjustment. What is adjustment? Includes tax deferred saving plan, like 41K, IRA, etc. And the percentage of college expense. For example, every month you want to put $1,000 in your 41K to save it. When you're retired, you can use or get the money from this account. So this amount of money you don't have to pay tax. So adjusted gross income is 5,000 minus 1,000 is $4,000. And if you are taking some classes in the college or university, the percentage of your college expense can also be the adjustment. But this amount of money isn't universal. It depends on the specific rule or program of your percentage of college expense. Next definition is taxable income. Is figured by subtracting deductions from the adjusted gross income. So the formula is adjusted gross income minus deductions. The TRS changed the formula. So if you took this class before, maybe 2 or 3 or 5, 4 years ago, and we're having different formula, that formula is a adjusted gross income minus exemption plus deduction. So now we are not using this. We combine E and D together, is just the deduction. So be very careful. All right. Let's see. What is the meaning of deduction? Deduction has two parts. Not two parts. We have two kinds of deductions. The first one is standard deduction. And another one is itemized deduction. The standard deduction is a lump sum amount that you can subtract from your adjusted gross income. That means this amount of money you don't have to pay tax. For example, on the tax table. So if you are a single, so your standard deduction is 12,550. And if you are married and both partner file a single tax return, so your standard deduction is this amount of money. Okay, let's erase this. All right. Itemized deduction are deductions you list separately if you have incurred many deductible expense. For example, if you have to pay mortgage every month and property tax, you have to pay state tax and contribution to charity and medical expenses exceeding 7.5% for adjusted gross income. You have to pay a lot, so including the mortgage, property taxes, and a lot of other things. So if you add them together, we call this amount of money itemized deduction. And the deduction here, different color. The deduction here, so the deduction is standard deduction or itemized deduction. It all depends on which one is more. For example, your standard deduction for a single is $1,250. And if you add your mortgage, property taxes, state taxes, and all of the others together, you got 2,000. So 20,000 each year. So your deduction must be the greater value. So I'm using $20,000 in the deduction part. And you cannot add the standard deduction and itemized deduction together. You just choose the one which has the bigger value. Okay, we are choosing the greater ones as deduction. We should compare standard deduction and itemized deductions. Which one is greater? Let's see the first example. A single man earned wages 46,500. Received 1,850 in interest from a saving account. Received 15,000 in winning a television show. So what are these three numbers we mentioned? These are incomes. And add them together, they are my gross income. Oh, the single man's gross income. And contribute. Oh, you see, contribute 2,300 to a tax-deferred saving plan. What is that? We call this adjustment. This part of money is adjustment, maybe IRA, maybe 41K. The standard deduction is $12,550. Standard deduction. So where is the standard deduction? Is from our table here. The interest in this home mortgage, okay, he also has mortgage, 6,500, and he paid 2,100 in the property tax, and 1,855 in state taxes, and he contributed $3,000 to the charity. So I shouldn't use this color. Let's use different color. Let's use this color. This amount of money, the sum of these four together, they are itemized deduction. Okay, let's see the first example. Determine the man's gross income. So this is A. The gross income equals the sum of these three income part. 4,6,500 plus 1,850 plus 1,3,000. So add them together. So what is this amount of money? Is 6,3,350. You can use your calculator because I'm looking for my cheat sheet, but it's really far from me. So we're having 4,6,500 plus 1,850 plus 1,500. And this is the money, 6,3,350. 6,3,350. Okay, what is the part B? So let's see part B. Determine the man's AGI, adjusted gross income. What is the formula? I'm using the gross income minus adjustment. So what is the gross income? The part 1, 6,3,350 minus the adjustment. So we highlighted adjustment is the money, 2,300. Deposit this money to the tax deferred saving plan, 41K or IRA. So 2,300, and then we can use a calculator to find it is 61,050. And part C is looking for the taxable income. What is the formula of taxable income? I'm using the AGI minus deductions. And so AGI is coming from the previous step. But what is the deductions? We say deductions. Maybe I'm choosing my standard deduction, or maybe I'm choosing my itemized deduction. I need to compare which is bigger. So the standard one is 1,2,550. Itemized one, I need to add all of these green numbers, green values together. They are all my itemized deduction. 65,000 plus 2,100 plus 1,855. Oh, sorry. I also need to add the 3,000. I forgot. So if I'm using my calculator, I'm adding 6,500 plus 2,100 plus 1,855 plus 3,000. Together is 1,3,455. So this amount of money, which is my itemized money, deduction is 1,3,455. Which one is bigger, the standard deduction or the itemized deduction? Yes, itemized deduction. So I'm going to use the itemized deduction equals AGI 61050 minus 13455. And it's equals 47595. Okay. Let's see. Next part is a new definition we call the income tax. Income tax. If you are earning the money and you make a lot of money, then you need to pay your income tax. Income tax is percentage of your income collected by the government to fund its services and programs. Income tax equals tax computation minus tax credit. What is the tax computation? I'm going to give you a table later. In this table, for example, my taxable income. So for example, the previous example, I have my taxable income. It is 47595. This is the amount of money. So maybe when your money is in this bracket, and then you need to pay 10%. If your money is in the second bracket, you need to pay the first part 10% and rest of the part 12%. So use your taxable income and tax rates for your filing statutes, single, married, etc. to determine this amount of money, the tax computation. We will talk about this part later. Okay, let's see the example. Let's memorize the formula. Income tax equals tax computation minus tax credit. Okay, suppose you are single. Your taxable income is 25,000. Oh, I don't have to do the computation about the taxable income. So you see previous example, I did a lot of work to find my taxable income. But this one is already given. $25,000. In this scenario, your marginal rate is 12%, and you're in the 12% tax bracket, no tax credit. And what is your income tax? So looking for the income tax, we have the formula here equals tax computation minus tax credit, and I don't have tax credit. I only need to stop here. Income tax equals taxable computation. Okay, how to do the computation? Using your taxable income, $25,000, and also it reminds you that your $25,000 is in this bracket. You are a single, so finding the information from the single column. And your taxable income is in this my highlighted bracket. That means your first amount of money, or the money from 0 to $9,950, need to pay 10%. Rest of the money need to pay 12%. So when you're paying the 10% of your income, it is 9,950 multiplied by 10%. Based on this amount of money, I'm paying 10%. 10% equals 0.1. Equals $995. And how about your rest of the money? Rest of the money you're paying 12%. And I'm using 2500, another 0, minus. So your first 9,950 already paid 10% tax. And rest of the money I'm using 25,000 minus 9950. Then multiply by 12%, which is 0.12. And then we can use our calculator. It's 12, let's have parentheses, 25,000 minus 9950, close parentheses, times 0.112 is 1806. It is 1806. We are going to pay the total tax is 995 plus 1806 equals 2801, $2,801. That's my total tax. Okay, if other questions, it says married filing jointly, and then you should focus on this column. Okay, let's see next example. We're using this table very often. So print out this table. Example 3, calculate the federal income tax. We're looking for the federal income tax owned by a single woman, a single again, with no dependents, whose gross income adjustment deductions and credits are given in the margin. Use the 2021 marginal tax rate in table 8.1. That means this table. Okay, let's start from the beginning. It doesn't ask step by step, but I'm going to solve all of the information. So first, gross income is 67,000. And then we have the adjustment. What is the AGI? AGI equals the gross income minus adjustment. Gross income is 67,000 minus 9,000. It equals $58,000. This is adjusted gross income. And then what is the taxable income? So taxable income equals AGI minus deductions. And the deductions, we have learned it has a standard deduction and itemized deduction. Which one I'm going to choose? It all depends on which one is greater. So if I'm going back to the table here, if this woman is a single and the standard deduction is 1,2,550, and the itemized deduction, I need to find the sum of the itemized deduction. So we have 7,500 mortgage interest, 3,300 property tax, and 5,450 charitable contributions, and the 1,500 medical expense. But let's come back to the definition of the itemized deduction. The last sentence is medical expense exceeding 7.5% of your adjusted gross income, your AGI, then it will be counted as itemized deduction. If it's less than the 7.5% of the AGI, then it's not my itemized deduction. Let's see, can I count this $1,500 as my itemized deduction? So let's see, 7.5% of your AGI. Where is your AGI? Here. So 7.5% times 58,000. So let's use our calculator. 7.5 is 0.075 times your AGI is 58000 is 4,350. Okay, let's see. Copy this one here. Is 4350. This amount of money. More than this, I can count it as the medical expense. But you see, this money is less than 7.5% of your AGI. That means this is not counted in your itemized deduction. So let's cross it out. So let's sum up the itemized deduction. It equals 7,500 plus 3,200 plus 5450. And what is that? Let's use our calculator. 7,500 plus 3,200 and then plus 5450 is 16,150. Okay, it is 16,150. Okay, let's compare these two numbers. Which one is greater? This one. So my itemized deduction is my deduction. I'm using AGI 58,000 minus 16,150 and use my calculator to find. This is 41850. This is the taxable income. Okay, and next, how to find the federal income tax. So we are using this number. Let's use green. This number, taxable income, and then go to the table. So this woman, this lady is a single lady. And then we are finding something in the single lady column. So in this column, 41,850 is in which bracket? I'm thinking it's in this bracket. It's not working. Oh, here. In this bracket. Her money is just in this bracket. So first, she need to pay the money from 0 to $99.50. This 10% of the money. And also, she need to pay this amount of money, 12%. And rest of the money, it is 22%. Okay. I want to have that table here, but I forgot to draw a table here. So let's draw that table. This is a single lady, 10%, 12%, and let me find 22%. And the money here, the first bracket is from 0 to 9950. And then second bracket is 9951 to 4525. And then next table is 40526 to 86375. Copy it from the table from the previous part. This is a table here. All right. So for her 10%, she's having $9,950 multiplied by 0.1. So this amount of money she need to pay 10%. And then the money between between 9951 to 4525, she need to pay 12%. And this amount of money, how to find the class width? Do you still remember? Finding the class width means finding how many elements in this bracket. I'm using the lower limit, this one, minus the previous lower limits. You cannot use the use this money. You cannot use this minus this. You're using the lower limits minus the previous lower limits. That's a class range. Okay, equals 40525 minus 9950 times 12% is 0.12 and 22% it is I'm using rest of the money because this amount of money I highlighted in green. So here, come to here is in green. So it's inside of this bracket, but it's not more than the cap, upper cap. That means I'm using this. I'm using 41850 minus what? I always say minus the previous lower the previous this is not lower, this is the upper one, upper bound, upper limits. So minus the previous upper bound. So do not minus the same the value in the same bracket. So minus 40525 multiplied by 0.22. And then we can use calculator to find all of these values. So the first one is 9950, no zero. And second is 3669. And next one is 291.5. And sum up all of these numbers. So I add them together. This is the tax computation part. Then also we need to minus the tax credit because this lady has the 500 tax credit. So we're adding them together, 955 plus 3669 plus 2281.5, then minus $500. This is the credit, taxable tax credit, and equals $4,455.5. So this lady have to pay the tax $4,455.05. Okay, let's see. Next part is compute a monthly payment and interest cost for a car loan. Loan payment formula for fixed installment loans. So how do we find this fixed installment loans? So every month I should pay the PMT money. So if you are lending money or you are asking money from a loan company or from a bank, for example, you ask $20,000 from this loan company, and you should to buy a car or buy a house, you are going to pay each month a fixed amount of money, and for maybe 10 years, 20 years, or 30 years, or some of you pay 5 years. So every month you are going to pay the fixed amount of money. That's annuity. We learned annuity. That's what I should pay the fixed amount of money each month. So annuity, the future amount of money, or after 20 years, you are going to put how much money in this account. The annuity formula equals PMT, the fixed amount of money, multiplied by R over N, all divided by another parentheses. Parentheses 1 plus R over N to the NT's power. And then minus 1, close the bracket. And how about your loan company? Your loan company will not getting the money from you each month. they are waiting for the total amount of money. They're using different formula. They are using compound formula. The compound formula is they are paying you the principal. This is the money they are going to pay you. But they are asking you the compound interest. So the future value for the compound interest is P, the principal, how much money of the car and how much money of the house they are paying you, and then the interest part using this formula, adding them together, it is P times 1 plus R over N to the NT's power. In this formula, the A, future value A, they are the same. I can equate these two and then isolate your PMT. That's a fixed amount of money you're paying each month. So we can isolate the PMT from this equation. Then I got this formula. So you must memorize this formula. If you don't, I'm going to provide this formula on your exam. You can use this formula to solve the question. So PMT is every month. So sometimes you're not paying monthly, you're paying weekly. So the N equals, so weekly, N equals 52 if you are paying weekly. And if N equals 12, you are paying monthly. Most of the time, we are paying our car loan and mortgage monthly. So most of the time, N equals 12. Okay, so the P represents the principal, or how much money of your house, how much money of your car. Multiply by R over N, interest rate, divided by how many times you pay each year. For example, monthly, N equals 12. Semi-annually, N equals 2. Divided by the bracket 1 minus parentheses 1 plus R over N to the negative NT's power. Be very careful. Here is negative NT's power. It's not positive NT's power. Okay, let's read the question. Use the formula, solve the question. This example, suppose that you decide to borrow $20,000 for a new car. It's cheap. This question is from so many years. So now to a $20,000 car is not an expensive car. You can select one of the following loans, which requiring regular monthly payment, installment. Loan A, 3 years loan. Oh, you have two options. The first option is a loan, the company A. It has 3 years loan at 7%. They all have the installment loan. That means your PMT. Monthly payment is fixed. And second plan is 5-year loan at 9% the interest rate. Let's see. Number A, find the monthly payment and total interest for loan A. So monthly payment is PMT. That's the fixed amount of money I'm paying each month. Equals, the formula is P times R over N divided by bracket 1 minus 1 plus R over N to the negative NT's power, close the bracket. And then plug in the P, R, and T's value. P is total amount of money of the car is 20,000. Multiply by the plan A, loan A, gives you the 7%. 7% is 0.07. 9% is 0.09. 0.07, all divided by N equals 12 because you are paying monthly. Okay, divided by 1 minus 1 plus 0.07 over 12 and raise it to the negative N is negative N equals 12. T, how many years? 3 years. Because you see here, it's tell you that 3 years. Another plan is 5 years. Okay, I plug all of these into my calculator. That's a huge computation. So 20,000. 20,000 then multiply by R over N is 0.07 divided by 12. Close parentheses, this is my top. Divided by the denominator. Denominator has bracket and parentheses. Let's use the parentheses represent first bracket. 1 minus parentheses 0. Not 0. Clear. Delete. 1 minus 1 plus 0.07 divided by 12 and raise it to the negative nt. N is 12, t is 3 years. Move the cursor down. Close the parentheses. Let me double check if I have everything. Yes. Hit enter. If I only round it to the nearest dollar, make it simple. We're having 618. Every month I'm going to pay $618. This is dollar sign. And what is the interest? How to find the interest? The interest equals the money you paid in full, and then minus how much money of the car listed, $20,000. So each month you're paying 618. You're paying 3 years. And then each year has 12 months, multiplied by 12. And then minus the money of the car is 20,000. Let's see how much interest we are going to pay. So is 618 times 3 times 12 minus 20,000 is 2248. So $2248. This is the interest. We're solving this PMT and the interest. Okay, the second question is asking you find the monthly payment and total interest for loan B. Let's find the PMT first. PMT is how much money you pay each month, equals the formula P times R over N, all divided by 1 minus 1 plus R over N to the negative NT's power. So plug in all of the value. So same amount of money, 20,000. But R becomes 0.09, all divided by 12, paid monthly. And divided by the bracket 1 minus 1 plus 0.09 over 12 and raise it to the negative NT's power. 12 times T. How many years in second loan? 5 years. Let's multiply by 5. And then we can use our calculator. So 2,000 multiplied by the top is 0.09 divided by 12. And then all of them divided by bracket 1 minus parentheses 1 plus 0.09 divided by 12 and raise it to negative n times t. N is 12, t is 5 years. Move your cursor down, close the parentheses, hit enter. Okay, round it to the nearest dollar is $415 each month. So equals $415 each month. Okay, what is the interest? The interest equals 415 times how many years? 5 years. Each year we are having 12 months. Then minus 20,000. This is the interest. We can use our calculator. 415 times 5 years times 12. So 5 times 12 is how many times I'm going to pay in 5 years. And then minus 20,000 is 4900. Okay, let's highlight the PMT and the interest. Part C, compare monthly payment and the total interest for the two loans. So the A plan has more PMT monthly payment, but you see it will pay fewer interest here. you can say, but less interest. So B has less. You can put has, or you just understand what's the meaning of that. Has the less PMT because only each month pay for $15, but it has more, or it has higher interest. Okay, let's see next example. Compare monthly payments on new and used car. Number 5. Suppose that you are thinking about buying a car and have narrowed down your choices to 2 options. The new car option. The new car costs $25,000 and can be financed with a 4-year loan at 7.9%. The used car option, a 3-year-old model of the same car, costs $14,000 and can be financed with a 4-year loan at 8.45%. So do not let this word, 3-year-old model, confuse you. It's nothing about our question. Just memorize this an old car. It doesn't matter how many years of the car, of the model. Okay, what is the difference in monthly payment between financing new car and financing the used car? Okay, let's find what is PMT for these 2 cars. So for a new car, the PMT has the formula, which is the principal or the total amount of money of the cost of the car, the new car, multiplied by R over N, all divided by bracket 1 minus 1 plus R over N to the negative NT's power. And plug in the P, R, T, and N. So P is the new car costs you $25,000. Multiplied by the rate of the new car is 0.079. So convert your percentage to decimals. Divided by, so you pay the fixed amount of money monthly or weekly or something. Let me see, monthly. So here you're paying the PMT monthly. So divided by 12. All divided by 1 minus 1 plus 0.079 over 12. And then raise it to the negative. N is 12. T is how many years? 4 years. Let's see what is the PMT. So we can use our calculator. Input all of these data. 25,000. Multiply by 0.079. Where is my 9? Divided by 12. This is my top. Divided by parentheses 1 minus parentheses 1 plus 0.079 divided by 12. Close the parentheses, raise it to the negative NT's power. N is 12. T is 4 T years. Close the parentheses, hit enter. Okay, run it to the nearest dollar. We are paying $609 each month. This is a new car. How about my old car? PMT. You don't have to copy the formula all the time, but I want you to keep practicing. Copy as many times as you can. Then you can memorize the formula. Okay, it equals P, same amount of money? No, different. Because let's read the second sentence again. Second case, the used car again. So this is the money I'm going to pay for my total amount of car. But I'm asking a loan. I don't have this amount of money. And can be financed for 4 years. T equals 4. And the rate is given. Okay, so the P is 14000. times the R is 0.0845, all divided by 12, paid monthly, divided by bracket 1 minus 1 plus 0.0845, all divided by 12, and raise it to the negative nth power. Negative n is 12, t is also 4 years. Okay, close the parentheses. Oh, sorry. Close the bracket. Then we can use our calculator to do the computation. We're having 14000 times 0.0845 divided by parentheses 1 minus parentheses 1 plus 0.0845 divided by 12. Close the parentheses, raise it to the negative nt. N is 12, t is 4. Close the parentheses. We're having 4 something is different from my cheat sheet. Let me double check where's my problem. Oh, I see. In my formula here, what is the top? I'm having P times R over N. Where is my N? I forgot to put my N. So divided by 12, that is N. And double check if everything good. So P times R over N divided by 1 minus parentheses 1 plus R over N to the negative nth power, and then close the parentheses. Yes, no problem. All right, yes, this is the correct answer. So the PMT monthly payment is for $345. So round it to the nearest dollar, $345. So what is the difference between two cars each month I should pay? Is using 609 minus 345. This is a difference between these two plans. Difference 264. We pay less on the old cars. All right, this is the last question of this lesson. Let me know if you have any question.